live. Um, all right, what's up, everybody? I'm here with the founding member of Fathom DAO and the co-founder of Desync Labs. Tyler, how you doing?
Doing well, Quincy. Thanks for having me on today.
Awesome, awesome. Yeah, I wanted to be able to have a chat with you and not only talk about Fathom, talk about your involvement, talk about the new products that are coming out, the new software, but also just talk about the space as well.
Yeah, sounds good. Super exciting times for real world asset DeFi and Fathom and XDC right at the heart of that. So lots to talk about right now. We're certainly of the mindset that this is, the narrative that persists within crypto over the next, 1 to 2 years, but really defines the narrative for, bringing in those trillions of dollars we keep seeing pop up in news articles.
Yeah. So, can you give everyone a rundown of what is Fathom and what makes you guys different than every other uh, either product, software, or technology out there in the space?
Yeah, definitely happy to do it. Certainly some distinctions and some parallels to draw to other DeFi platforms that are out there. But I think the best way to think about Fathom the DApp, and its totality is really like four protocols baked into one. And we sort of did this to just bootstrap DeFi activity on the XDC network. There was a lot to build, so our thought process was basically why not build it all, right? So Fathom, in its core, is a collateralized debt protocol. So you can think of, the main function similar to MakerDAO, in that you can come with your collateral and then mint a stablecoin or open a stablecoin position off of that collateral, just like you would do on Maker when you go to mint DAI, their stablecoin. So for XDC holders, you'd come to Fathom, you'd hold on to your XDC, but use it to open a position to gain liquidity via our stablecoin FXD. And this means that you essentially don't have to sell out of your XDC. So you can, close that position in the future and then sell XDC after price appreciates. Basically, it's something you would use to access liquidity when you have a bullish view on the underlying asset. So this
See
is
that?
yeah, I'll stop.
No. You keep going. You
Yeah.
keep going. I love everything you're saying, and it's just one of those things that just unlocks a lot of liquidity,
Yeah.
unlocks a lot of capital for XDC holders, especially when you have a bullish view and you want to be able to hold on to it, but you also want to be able to have a means of being able to redeem some value of some of the underlying asset.
Yeah, exactly. One of the main reasons, in addition to accessing liquidity via XDC2, is the participation of the network in trade finance. So, to really get trade moving, and we've seen this with the proliferation of stable coins in general, but you really need a standardized unit of account, right? So when you're doing a trade finance deal, they're not going to transact necessarily in a crypto asset. That's why stable coins exist. So everyone knows there won't be any volatility in the medium of exchange during the deal time. So we've actually run, I think, 8 or 9 trade finance pools with FXD, which I don't think another protocol can even claim. Even the billion-dollar protocols out there, I don't think have been focused on trade finance. But super exciting area. Lots of articles coming out talking about trade finance as one of the biggest first stops for tokenization and DeFi and real world assets. Essentially, how this would work is you'd basically use FXD, the stablecoin, to lend to a liquidity pool. That liquidity pool is essentially managed by a TradFi trade finance institution who couldn't get bank financing through traditional means. So we're basically taking retail who comes in as lenders, lends the capital to complete that trade finance deal, and then the return, for that pool is basically based on the underlying trade receivables. So again, we've done like 8 or 9 of those with some really good success. Looking to increase that this year for sure.
That's really interesting. That's really interesting. Actually, we have someone in the chat asking, is FXD available on different wallets? Are you guys available on different wallets?
Yes, you can get FXD a couple ways, and we're certainly looking to grow this over the next few years. You can go to Bitrue and you can purchase FXD straight from the market, or like I said, you can mint it via using XDC as collateral. You can also obtain it within the Fathom DEX as well. I think in terms of ease of use, I would recommend MetaMask as the wallet you use to interact. But we have a couple integrations out there via Wallet Connect, whether those are with institutional custodians for people who want to hold their money there but still access DeFi protocols. to like cold storage wallets that can also interact again through Wallet Connect. So a couple of different options there, but we're looking to expand this over the next year. Browser wallets, in my opinion, probably still the easiest, but
Now, you also say because there's this element of being able to interact with your platform for retail to act as lenders. What type of institutions have you had on the other end that are able to fulfill these deals?
yeah, so all of those 8 or 9 pools are actually run by trade finance companies. I don't know if anyone would like know the household names, but like Trade Flow Capital, one's been set up for SNS, and we've done the full list is on Trade Finex, so you can go there and sort of get a list of the pools. But these are all traditional companies that we've brought in to run these things in the SME space. SME, meaning small to medium. These are the guys who have trouble getting financing from banks. So you're not going to see like, super household names on there, but companies that are doing billions of dollars in the trade finance space in terms of volume are coming over. So this is, sort of like the first step in onboarding maybe some household names as well in the future.
No, that is awesome. That is awesome. Um, yeah, one thing that you got a chance to show me was I don't know how public some of your products are. We were sort of talking about this the other day. But what are some of the things that you have out for retail? But what are some of the other new products that you have coming out? Not only the things that we talked about, but some of the things that you guys have coming around the corner.
Yeah, definitely. So, I got through part 1 of the protocol, and I mentioned part 2, which is the DEX. So this DEX is basically, a stable swap DEX based on like V2 architecture, but we're improving this now. So in fairly short order, I think like next few months, we'll be rolling out like a proprietary V3 DEX that's, inspired but curved, but not a replica of curve. So, eliminating as much slippage as possible, putting our own mechanics behind the DEX, and that'll sit with inside the Fathom depth for people to trade between different stable coins and increase liquidity. So this is very exciting for us. It'll be, like a, bottom up build for us, no forks involved. The next super, important piece of Fathom DApp is the vaults. So you might have heard us mention these as RWA vaults, and those just launched this week. So this is really like a game changer in my opinion. We've been working for years to sort of get these vaults up the ground in the fashion that they're actually launching. The one we have up now is basically passing returns back to FXD holders, and it's a super simple vault. This is really meant to just educate users on what the following RWA vaults will look like and how the structure will be, get people comfortable with the process, but they're still generating quite a healthy APR for anyone who wants to log on to the DApp. You can follow the Fathom Twitter for more information there. It's at Fathom_FI. So we have that live vault. It's up and yielding now, and the plan is to essentially run that yield vault for 3 months to basically educate the space. And that's a super simple vault, but the vaults are built to do much, much more than that. They're essentially a fully automated asset management protocol. So basically this means we can have institutions come in and run any type of asset management strategy through the vault in an automated fashion, whether that's based on a single real world asset like gold, or whether that's a basket of assets that mimics an ETF or an index, or a super advanced hedge or trading strategy. All those things can be run through the vault, all automated. And essentially what that does is eliminate some pretty big fee layers from the traditional asset management space. And then it takes time to market for these asset managers down from like 6 to 12 months to instant. So super big cost savings and a big improvement over time to market. Functionally, basically, what a user would do to access any of them is come with FXD, our stablecoin, and then deposit it into the vault. And there's no lock period. APR is distributed based on how long you're in the vault. So we do it that way, but there's no lock period. So you can reclaim any of your assets at any time. And I think, probably the novel piece of this, and maybe the most important implication for, bootstrapping tokenized real world assets, is the fact that when you deposit to a vault, you receive a vault token. So similar to how you'd receive a, share token in any lending pool that you participate in, for the vault, you're going to get a token, but that vault token is going to represent the underlying strategy or basket of assets within that vault. So you can imagine now this vault token is pretty much like a tokenized ETF or a tokenized index. If the S&P 500 was the strategy that the vault was run on, when you deposit, you receive an S&P 500 token, meaning the token is linked to the S&P 500 basket underlying the vault. And then those things can go out and be traded on secondary markets. So this is like something that's not happening in the space. And I think the establishment of secondary markets is really going to go a long way in terms of bootstrapping liquidity, which is, still pretty non-existent for tokenized real world assets.
See, now that's quite amazing.
Yeah.
One thing that I find really interesting with that, and I actually, this is like a real world example. I had somebody come up to me. I was at ETH Denver, and the reason I say this is because I see a lot of examples like this, and there's like this weird sort of how to, and I see sort of you guys in this perfect position to sort of like bridge this ability. So this guy came up and he spoke to me. He was this oil guy, right? And he was very interested in blockchain because of the ability of like fractionalization and the ability to be able to raise funds and do a bunch of different things in that way. And he had his business where he would go to different sites and he would go like drill for oil. Now, different sites would have different yields based off of what type of prospects they'd have and what type of, where it's located. But every single time they went to a site, it would cost a ton of money. So he was trying to figure out, is there potentially a way where he could create a means where he could raise the funds to be able to execute a dig site or whatever, and then be able to issue back the revenue, whether it's 10%, 20%, 30% of that, of the oil or whatever, of the proceeds of the oil from that site to the people that help do the raise. And the reason he says that is there are a lot of opportunities out there for him to get in on, but it's quite expensive and it's quite difficult to be able to raise that capital. So for someone like him, how could he potentially use, or how could someone in that position potentially use your platform to be able to gain the capital, but also tokenize? Because he was asking me, he's like, I hear about tokenization, I hear about all these different means, and it seems almost foreign, but at the same time so simple. And that's why when I see your platform, I'm like, it's almost like, if obviously you sort of need to be in the space enough, but he's an oil guy, so of course he's not going to be a technical person. But can you sort of like explain like how someone like that could sort of go through a platform like yours and be able to represent an asset or represent a process, just like you stated with the vaults and such? And I only say so because I get asked this all the time. Like that was just like kind of the most elaborate one I've gotten asked definitely in the past few months. But it's like, how do people tokenize, and why would people tokenize? And there are only so many examples you can give, but bring up the oil example, is that is just like, I would have never thought that. Oh yeah, I need, enough more capital to be raised for an oil site and dig. But these are like real world examples and use cases, that are right around the corner that can be utilized, and being able to have software that can utilize it is something that's missing, and I just wanted to see what your comments were on how people that are in that position, that have these specialities or competencies, but are trying to figure out how they can tokenize or be able to find these methods of tokenization and utilize like Web3 in that domain.
Yeah, definitely. I mean, there's, basically what you're talking about is, capital formation, which I think tokenization has sort of taken that was one of the first like sort of hits in terms of use cases, the ability to raise capital. So, I think functionally this example is quite similar to the SME trade finance companies we're running pools for who couldn't raise bank financing. This is the same thing, that the oil guy wants to go out. He necessarily can't raise capital to do all the exploration he wants. So he's basically going to the retail market, asking for casting a wider net for smaller chips, still gets to the same place, which is enough money to go explore these things. And then, tokenization allows for a lot of interesting things on the back end. Like he can basically program distributions into those. Cap table management becomes much more easy and a lot more easier for this type of distributed model, which is like crowdsourced funding 2.0. I'll be upfront, like this really isn't the goal necessarily of Fathom to work for people who are strictly using to do like project finance, which is what I'd put this in. But, certainly I think we could definitely adapt either, the pools using FXD, potentially even, run a vault for this type of like specific capital formation process. But I think this is definitely a good use case for tokenization. In one of my previous roles, I actually got a chance to work a little bit with a renewable energies project, or rather a rare earth elements mine in Greenland, who is doing the same thing. So doing a multi-billion-dollar issuance of tokens, trying to raise capital to build a rare earth mine in Greenland.
Wow.
So it's
Wow.
out there,
That's
man. Yeah. That's one of the big
yeah.
ones for sure. Yeah.
That is so insane. Oh my goodness. Oh my goodness. So, what are some of the future goals or future prospects with? Because you think you stated there were like 9 or 10 different institutions that you're working with now. What would it look like at scale, and what would it look like at scale in retail for what you guys are trying to do?
Yeah, definitely. So, I think at scale, we're talking about going from a few $1 million, split between those pooled to hopefully a few $1 billion. This would be the goal. That's what scale would look like. And, basically looking to service that entire SME trade finance market for that specific niche, which, is really just one function of the protocol. But yeah, I mean, that gap is anywhere from 1.5 to like $4 trillion, based on various consulting estimates. So like that's a huge gap to plug, right? There's no single protocol that can even come close to that at this time of day. So, this is where use case becomes super important. That's one of the things we liked about XDC was this focus on trade finance. And then knowing that trade finance was sort of ripe for tokenization. But yes, scale in that specific, use case looks like, trillions of dollars in lending pools that are basically supplanting banks that wouldn't lend to these folks. Um, yeah.
That's really cool. That's really cool. And so I was gonna say, right now is FXD only available through your platform, or can people also get that on an exchange too?
Yeah, so you can get it a few ways. You can mint it yourself using XDC as collateral right now. You can acquire it through our DEX via swapping for it, or you can go to Bitrue and acquire it just directly, like, paying, a buck or around a buck for one FXD. But yeah, we're looking to expand that in the future. We're looking to form some partnerships, not only with other centralized exchanges, but also DeFi exchanges, and also talking to some like institutional OTC desks. But same goal, spread FXD, cast as wide a net as possible.
Now, would you consider a FXD just sort of like a general tool of Fathom, like for collateralization, or you guys consider yourself like a competitor to like Tether, USDT, or USDC?
Yeah, the centralized stable coins like USDC, USDT, I think there's a market difference between decentralized stable coins and those folks. The on-chain process, everything is on-chain for a DeFi stablecoin, right? So you get full transparency. It's over collateralized. So you're basically avoiding any depegging issues this way if it's designed properly. We've seen a litany of issues on the other side in terms of the off-chain components that USDC and USDT engage in. USDT obviously is fairly opaque, right? There's been questions about that the entire time, and it depegs every now and then. But even USDC, if you remember, like the Signature Bank episode, what was that, a year ago? I've been trying to erase it from my memory, but a little over a year ago, maybe it's 2 years at this point. But what happened then was, you saw a huge depegging event with these, what they call the safest stable coins in the industry. But I think there's a really big point to be made in terms of DeFi stable coins having a place and having a big place alongside those centralized stable coins. And I think it, mostly has to do with counterparty risk that's significant on the centralized side. And I guess this is a good plug too. So if anyone follows RWA.xyz, they've sort of, hit the scene and emerged as one of the best analytics platforms out there for real world assets and tokenized assets in general. But we just got Fathom added to them, but we're also going to be contributors in terms of like writing thought pieces for them as well. So we have a paper on stablecoins coming out over the next few weeks. We'll certainly, repost it from Twitter, but it's basically going to dive in and do a deep dive on centralized stablecoins versus decentralized stablecoins, what Fathom brings to the table and what makes us different. So yeah, we're excited to be a part of that. They're going to do a whole stablecoin series. So I'd, tell everyone to listen in and, learn as much as you can. The simple fact is stable coins. I mean, you should think of these things as real world assets, and stable coins is the first and by far the largest real world asset use case right now. So we're really just, this is the tip of the iceberg in terms of what I think we'll be doing with these things over the coming years.
Okay, okay. I was gonna say for the average like retail, let's say I'm like the average crypto Twitter retail Andy, I guess you could say. Um,
Retail Andy, I like that. It should be a meme coin.
yeah, yeah, yeah. Um, yeah. So when I'm engaging with Fathom, I know you guys have a Dex. I know you guys have your vaults, FXD as like a stable coin. Um, I know you guys are a DAO. I don't know if we've gotten into those components yet. So what are the components of a DAO that make you guys not I don't want to just say unique, but I know you have all these different products. But what makes your the DAO I guess you could say interesting.
Yeah, I guess the fact that we have, pretty much like four protocols baked into one makes the DAO decision making all the more important. So as a DAO member, you're going to get to make decisions on, essentially four different protocol components as opposed to just maybe one. But I think, the DAO becomes super important, especially when we're talking about real world assets, because you need to discuss things like what collateral to onboard, what strategies should be in these vaults at a certain point in time. And when you think about, okay, we're onboarding maybe collateral to back the stable coin, this really becomes like a risk management exercise. So there's a lot of like important things to decide via the DAO. We follow a similar format in terms of DAO in that we're fully decentralized, same way as Maker would be with their DAO. And we're sort of as we go adding more and more responsibilities to the DAO. So risk management I think is probably going to be one of like the biggest functions going forward, i.e. determining what collateral to onboard. But there's going to be a lot of things to decide through the DAO, like any potential protocol distributions of revenue, things like this, fees that are laid into the platform. All this stuff is going to eventually reside within the DAO. So if you go on Fathom DApp, the DAO is baked right in. You'll see it on the left hand navigation screen, just below FXD and below vaults. And you can basically, this is your one-stop shop for FTHM, which is the DAO governance token. You can participate in governance, you can stake FTHM to accrue more FTHM, create a proposal, or vote. And then everything that the DAO is voting on is tracked within that single screen. So pretty nifty feature. Gets overlooked I think a lot, but big part of Fathom for sure.
So, as like a DAO member, you have access to the DEX, the Vault, all the different protocols, as well as like these components in which you can vote with your community and
Mm-hmm.
engage in these protocols with your community. So you can have like this more cohesive structure in which people are able to operate in a DeFi environment.
Exactly. This is about I think decentralized finance in general, and maybe we saw this a little bit with like the GameStop saga as well
Yeah.
as like I think just we or me and the generation below us are tech forward, right? They've been had a cell phone in their hands since birth almost. So I think it makes sense to allow people to take more responsibility in their financial decisions, and DAOs have emerged as a way to do that. I think asset management looks a lot different in 10 or 20 years. I don't think any of us are going to be paying an asset manager 100 bips or a 2% performance fee to manage a basket of assets for us. I think a lot of that stuff is going to be taken on by individuals. So yeah, it's really just an education process, and I think DAOs are well suited to take over that role.
No, that's great. That's great. I think people being able to take autonomy and sovereignty and their own ability and being able
Yeah,
to engage in these really just financial instruments. I feel like before there was like this barrier to be able to engage in these elements of whether it's investing
definitely.
or in being able to offer these products. So now that anybody can be on both sides of it, anybody can essentially create a basket, but anybody can also evaluate what they see as valuable and be able to
Yeah.
accurately engage with them without, like you said, needing some sort of wealth management advisor to make the trade for you.
Yeah, and I mean, like, I think globally the numbers like 2 to 4 billion people can't even access the banking or financial system. So, this is also a way to, promote inclusion amongst, a third to half the world population who's not accessing that traditional system, which is, clearly serving the institutions, but maybe not everyone else as much.
Yeah, yeah. One thing I wanted to ask you, because a few people were asking in the chat. So, is Fathom only on XDC, or are you guys also on other EVM chains?
So I mean, XDC is EVM compatible, so Fathom is hence EVM compatible, but we are only deployed on XDC, with only plans to be on XDC for now.
Awesome, awesome, awesome. And
Yeah,
yeah,
so
and
yeah, I mean, I touched on that a bit at the beginning, but XDC was a great, sort of opportunity to build an entire DeFi ecosystem, right? And obviously, the ecosystem needs more players than us, but I mean that in terms of like we could build different protocols to hit different pieces, which is, super fun exercise, not just for me, but for the engineers as well.
yeah, yeah. I think one of the biggest things that a lot of people don't really necessarily like emphasize about XDC is there's a lot of opportunities. Everyone seems to
Yeah,
be sort of like spinning the block on the same ideas, like going over and over again. And some people sort of see this as an opportunity where, oh, if I could do this on this network, and there's that too. But there's also like real opportunity, especially around
yeah.
real world tokenization, real world assets, and being able to find an environment where you can like foster that well while everyone's sort of all over the place and things haven't
Yeah.
quite been set, and all of that. So yeah, there's a lot of opportunity to be had, and yeah, how you go about that is going to be one of the deciding factors. So
Yeah, totally agree. Yeah, I've said something similar. I think chatting with Billy on stage before is just, I think he asked me why XDC, and I think the answer was pretty much, the opportunity to build a lot of things was there. Whereas, yeah, if you go to maybe a larger chain and you're fighting it out, and it's just an exercise of marketing dollars. I don't know how much innovation there is, everywhere right now, but yeah, big opportunity on XDC. So we're super happy to be building on it. One of the things I'd cite from that too is we actually ended up building like our own oracles. So these are sort of tailor made to be real world asset oracles. And I say tailor made because they take stable coins as payment. So if you look at any other oracle like Link, Chainlink out there, they basically, to use that oracle, you've got to pay in Link. But coming from institutional finance, I know that it's basically a no from any corporate controller that is going to be told to hold crypto on their books to pay for an Oracle data service. Like it's not going to happen. So it can be paid in FXD. We could augment it to be paid in another stable coin. But yeah, oracles that are paid in stable coins dropping this summer. So we're using them already. It's going to take a little bit of time to commercialize them, but yeah, they'll be out and running this summer, which is super exciting. And then the other super innovative thing we are launching in April is borrowing and lending using real world assets. So you can see how like this platform sort of, it really is like a horizontally integrated platform, and it's made to sort of bootstrap liquidity for this whole tokenized real world asset ecosystem. So you can see how, the vaults that are tied to real world assets that mint an ETF like token, sitting side by side with a protocol where you can borrow or lend these real world assets all sort of works together. But we're super excited about that. I believe it's based on Aave v3 architecture, and then we made some mechanical improvements on our end in terms of like liquidation strategy and some other things. So it is definitely uniquely our own, and yeah, tailor built to handle tokenized RWA.
one thing that actually really stands out to me, especially when you commented on stablecoin oracles. Now,
Yeah,
one thing that I think is huge, I haven't realized how huge of a thing this is until I spoke to so many different businesses. Um, well, just two parts of it. One, there's oracles are going to be a huge mechanism to allow for data to be onboarded to
yeah,
any of these chains. So that's already in itself a huge thing. And paying for that is a whole nother thing. But there's also sort of like a tax implication, especially when you start utilizing like a ton of oracles for a
Hmm.
lot of information. And paying in a native token can be relatively difficult for a lot of institutions if it's incredibly volatile and they happen to use these price feeds. So being able to have a simple means of being able to keep track of essentially like all the tax and accounting in a stablecoin
Hmm.
for something like a price feed is huge. And people talk about that with stablecoins, with people trading cryptos in stablecoins, because it's like, oh well, once you're dealing in stablecoins, it's a bit easier to account for.
Yeah.
But it's the same thing with API feeds or Oracle feeds. And it may not be so much on financial applications, but you'll see a bunch of applications start realizing, oh yeah, this is an expense that we're utilizing here, and we're utilizing it in a stable coin, and this is something
Hmm.
that we're gonna have to keep track of in this way. So I find that really interesting because that's something that I always see, whether it's from gas fees and the tax implication on gas fees to potentially people using layer twos and dexes and swaps, and what does that mean in that
Yeah.
regard. So the idea of stablecoin oracles, it's an interesting idea to be for a tool to be utilized that way.
Yeah, we had one institutional, well, let's say hopeful partner, but an institution we're talking about the same issue, holding crypto on your books, and the capital charge to hold a crypto asset on their books is like over 2,000%. So it's like regulation has sort of made it impossible to do that for banks and some other
Yeah.
institutions. So yeah, this is a solution to that. And if you believe in real world assets, that basically means a ton of off chain data moving on chain. So yeah, we're definitely bullish on oracles. It is essentially mandatory to run any of this stuff. So they have a bright future for sure.
Yeah, and I think that's going to be something that's going to be really interesting. And I almost forgot. I was going to comment on the second thing you had, but I forgot what that was. Commented on the stablecoin oracles, and then yeah, you're
Borrow and
lending,
lending. Yeah.
borrow and lending. Yes, yes. So would that mean that people are able to? So I think that I'm going to ask two questions. Would that
Yeah.
mean people are able to collateralize real world assets, and also with that? Does that also mean that people are able to like lend real world assets as well? So not only can you like collateralize a loan, but could you lend the asset as well?
Yeah, exactly. So you can think of it like, what Aave does for crypto. You could basically come and, take a look at a pool, and you could either lend a tokenized real world asset to that pool, or you could borrow a tokenized real world asset from that pool. Um, yeah, this is, simply put, the basis of that. But yeah, this doesn't exist for real world assets yet. So, in our opinion, this is one of those things that goes a long way to, again, bootstrapping liquidity, getting these things trading. The model that was pursued to date for tokenized real world assets was basically this very siloed private market structure that resulted in a couple of platforms getting a decent amount of assets on the platform, but they still don't have any real volume to speak of. So this has really been what we've been working on the past few years, and that's creating DeFi as a distribution channel for tokenized real world assets. And yeah, I think you're seeing that start to take shape. I mean, you see BlackRock, moved $100 million to securitize. I have to assume that there's going to be some tie-ins with DeFi there. And you're sort of seeing it all start this year. After at least in my opinion, a much awaited start for sure.
Now, when you start seeing, especially like BlackRock and the utilization of like Securitize, what are some of the methods slash challenges that you're seeing in terms of being able to onboard traditional institutions, in terms of being able to tokenize their real world assets in these environments, whether that be on your platform or just the space in general?
Yeah, there's one glaring issue in that literally no one in the space has connected the inventory producers to buyers, meaning there's not a single platform out that's done a good job at connecting retail or institutional, for that matter, purchasers of tokenized real world assets that say an asset manager is producing. This is pretty much what every conversation goes with the bank where they want to tokenize something is, okay, where do I sell this? And there's really just not too many options that exist in the centralized side of things, that siloed private market structure that I was just describing.
So like
So this is
just the
why we went
liquidity for it.
DeFi. Yeah, that's why DeFi, man. DeFi is really the only place with enough users and enough volume to create a market for tokenized real world assets. And, that's why we view it as the main distribution channel, really now, but for the foreseeable future. But yeah, this is the most glaring problem in terms of that. Maybe secondarily, you have a bunch of different tokenization standards having to do with how they trade and compliance. None of that's really been standardized yet. So that creates some issues in various jurisdictions around the globe. And then there's the age old one, and I used to do a lot of this in the former role, is basically just having enough conversations to get someone who's been in finance for a couple decades comfortable with the fact of tokenization. But look, this is getting easier, and it's certainly getting easier as BlackRock talks about it. But in my previous role, I launched and ran the digital asset group at S&P, who's the biggest index provider for ETFs. And look, we were having talks with BlackRock and every other ETF manager in 2018, really 17 is when it started. And what we basically drew was the same parallel, and this is like the script from 7 years ago at this point, but now you're just hearing it in the media. And that script was essentially all these folks who work in the industry saw what happened in mutual funds. It was an outdated product wrapper, basically a technically outdated wrapper that they housed all these baskets of assets in. And when ETFs came along, which was a technical improvement, there's no flows into mutual funds anymore. They're one for one outflows from mutual funds go into ETFs, and that's because ETFs are simply more efficient. They trade throughout the day as opposed to just end of day of mutual funds, which created a liquidity bloom. But they also have certain technical advantages like tax loss harvesting and other things as well. And tokens are just an evolution of this. So the same thing that happened in mutual funds via ETFs, in my opinion, happens with tokenized wrappers to ETFs. And that's we go from intraday trading to 24/7 trading. There'll be a liquidity bloom on top of ETFs in that space as well. And then you get all the other technical features. You can still do tax loss harvesting, but you can do things like fractionalized trading, which allows fractionalized assets to essentially be used as cash, as a checking account, while still providing yield to the owner. I mean, these are transformative things, right? And we've taken the barrier away. You don't need to go get these things from a bank. You can get them from a phone.
Yeah, and simply just by having access to the internet as well, rather than
Yeah.
like needing like all of these different intermediaries, needing to file all these different it's so crazy to think of like how powerful a lot of these software are in comparison to the amount of infrastructure that would need to be placed in order to do the same thing in the traditional world.
Yeah, exactly. Um, yeah, much different landscape. It's going to be interesting to see what happens to asset management, to finance over the coming decades. Um, and I guess I'll add to this too, is like, I used to see it, when I was talking about tokenization a long time ago, I would just see the user driven things that we just discussed, fractionalization, using, tokenized assets as money. But more and more what I've seen, what's really going to drive this is, great, we'll keep all those user driven features, but what really drives it is going to be institutional cost savings. So a lot of these banks are fairly deep into testing DeFi architectures to say rework securities lending. And, the savings are in the billions of dollars annually for a single bank. That on top of automation, front to back end for fund management that you can do via blockchain. This is what's going to drive adoption, real adoption of tokenized products, in my opinion. The fact that there's user-driven benefits, that might be secondary to those guys, but it'll obviously be, first for the retail market. So it's good that we can, produce some value on both ends.
I think what you're gonna end up seeing is you're gonna end up seeing a kind of not unlike yourself, but a lot of smaller organizations be able to create services that are analogous to a lot of what like I said,
Yeah.
these bigger organizations were able to do for the longest time, and
Mhm.
simply with like just cheaper, just be able to do it for faster, cheaper, easily accessible, not only from like a retail perspective, but also like with SDKs and stuff like that, people being able to build on these things. I think there's a new level of like cohesion between how people are able to interact with the Web3 world that wasn't available
Yeah.
in Web2. And I think it's easier to see that with finance than it is to see that with tech because of how quickly we see things move with crypto and DeFi. With things in tech, it's like, yeah, everything in tech is flashy and fancy, but instant payments, instant swabs, being able to leverage your your capital, leverage your collateral in
Mhm.
different ways, and not have to go through giant hoops to be able to do so and give your money to somebody else. So
Yeah. Yeah, it's a big time, man. It's going to be a very, I think, pivotal moment for society. It's going to be, interesting. I was an econ nerd, my entire life. So before I was doing it, I was just reading books, thinking about, this transformation. But really exciting to live through it for sure.
yeah, yeah. I was gonna say is if you were to give sort of the general like vision to like the average like person in crypto, like the average viewer, how would you describe like Fathom and how you guys are gonna sort of like make your dent in the space in a sense? This is something I usually ask everyone in a way, just to see where do you see yourself in this space, presuming you can
Yeah.
make the difference you guys are working so hard to make.
Yeah, I think it really goes back to sort of that last, topic we were talking about, which is, access to services that might have been ring fenced for ultra high net worth individuals or institutions previously. So even if you think about like Fathom's collateralized debt protocol, this is essentially securities lending. And securities lending might make up a really huge chunk of revenue on a bank's balance sheet, but this is something that only ultra high net worth individuals have really had access to. So now you can do this via crypto, or now you can do it via tokenized real world assets. This is a pivotal thing, and I think that's the type of thing we're trying to bring to the consumer is access to institutional products or access to institutional like services, without the barriers, or in some cases, access for the first time ever. And yeah, this is really the core mission. We all come from institutional backgrounds, at Fathom. So our goals really been to sort of blend these two worlds together, figure out a way in which institutions and retail sort of sit side by side, but the net product is better for both parties.
See, and I think that's a challenge that is like universal. How
Hmm.
do and it's actually really funny because retail and like institutions are like two almost like polar opposites in terms of like where they're coming from when they're engaging in these markets. So finding a way where they can mutually engage with each other,
Yep.
especially in a decentralized way too, is something that it's something that is gonna be challenging to face. But presuming you can like solve that problem, not only are you able to connect so many more people together, but you're able to unlock so much more capital. And
Hmm.
I think that is just something that isn't to go unnoticed.
Yeah, absolutely. Absolutely. I mean, yeah, going back to like the trillions of dollars thing we talked about at the beginning, I mean, those figures only come via institutions, right? So I think the biggest, challenge is really to figure out how to, put these guys together with retail and, figure out a system that, like I said, works for everyone. But if everyone, believes in tokenization, believes in the future of crypto, I think it goes hand in hand with the success of, tokenized RWA. It's, not avoidable.
Yeah. I think it's gonna be the future in terms of how people are able to engage online,
Yeah.
especially in terms of being able to reference assets and different units of accounts as tokens as we start seeing like tokenization take way.
Yeah, and I think there's probably only one chance to get this right. I don't know how many other financial transformations I'm going to live through. So the time to lean in is now, and hopefully we can build some stuff that's better for the next generations to come.
Yeah. Um, I didn't know if there was anything else you wanted to get more into.
Oh man, I think we covered it all. I would, I think I threw this out to you beforehand, but if you're up for it, we could do a live mint of FXD, and then deposit that into a vault if you're feeling game.
Yeah. I was kind of hoping we could do something real
Yeah.
quick. Let
Yeah,
me
let's try
do.
it. So for everyone watching, yeah, the goal is to get Quincy to go from XDC into a vault, earning an APR under what should we 2 minutes? Is 2 minutes good?
Oh yeah, actually, I almost forgot how quick this was. How quick and easy. So yeah, I have Fathom up.
All right.
I'm not screen sharing, but I'm sharing on the live stream. So
Okay.
yeah, we
Cool.
spoke about this the other day in terms of Was this setting up FXD or were we setting up a vault? We're setting up FXD. We're setting up FXD.
Yeah, so we'll go through, take your, if you have XDC in a MetaMask, you'll open an FXD position,
Yep.
and then we'll head over to vaults and we'll deposit that FXD into a vault.
Oh, oops. Let me connect my MetaMask first.
Yeah, that's a crucial first step. I don't know if there's any rhyme or reason to when MetaMask connects or disconnects, by the way. I feel like sometimes mine will be open for days and sometimes it'll, lock me out every 2 seconds.
Okay, cool. Now that I'm logged into MetaMask. All right, cool. So I just dropped 99. I'll just make sure I put 99 XDC there. So I just put 99 XDC as my collateral, and my borrow amounts is 2.8, but I'll just put 2 FXD. So yeah, so what I'm doing is I'm minting 2 FXD and then collateralizing it or backing it by 99 XDC. Is that right, Tyler?
That is accurate. So yeah, what you just did is open an FXD position, which is exactly as you said. You're using XDC as collateral to borrow a stable coin.
Awesome.
And once that's in MetaMask, let's head over to the vaults page.
So yeah, it is in it's in my MetaMask. So in vaults.
And we'll just go to we'll only have one vault up. When you go to the vault page, you'll in the future see sort of a drop down directory of different real world asset or strategy vaults. But we just have the one FXD rewards vault now. So you can go click deposit on that.
All right, so I'm about to take the 2 FXD that I was able to mint off the backing of my 99 XDC. I'm about to deposit this into the vault, which is this vault. What was it? It was representation. What was the vault backing again?
Yeah, we're basically just as an, I don't want to say educational because it's live and it's giving off a return, but we're basically passing returns through the protocol to users with FXD. So we wanted to get everyone, sort of comfortable with, I'll call it like an entry level vault strategy before we start moving on to stuff that's more exotic, including real world assets, including like, trading strategies, things like this. So mechanically it'll function the same, but what you guys don't see is the strategy on the backside. And we have some drop downs. If you click into the vault, that'll go into the strategy and the about section with some charts and some other data points. That'll be super helpful. Pretty self-explanatory on this first one, but in the future, those sections will become a lot more interesting or exotic, let's say.
So each vault could be set with a bunch of underlying assets and a bunch of strategies for how. Okay, that's cool.
Exactly. So yeah, you could come in, you could see a U.S. Treasuries vault, you could see a gold vault, you could see a basket of 10 different assets or 100 different assets as a strategy, or you could get something more advanced like a hedge fund strategy. But basically, yeah, what we're trying to do is build a one-stop shop for people to manage their assets. In one place and everything be completely automated.
No, that's super cool. I remember we were going over it yesterday, and literally in 2 minutes. Not only can you mint a stable coin that's backed by your XDC as collateral, but also utilize that stable coin in a bunch of different strategies posed by the vaults. So, exactly. And that's almost like being able to free up capital, but at the same time, not having to sell your XDC technically to do so. So it's really cool how that is.
Yeah, precisely. So thanks for running the user or the viewers through that. You can also find some instructional videos for anyone out there who's watching, and maybe that's a little quick on the Fathom YouTube, and you can get to that Fathom YouTube again via Twitter. It's at Fathom_FI. And you'll also find some information if you want to join the Fathom DAO Telegram group on that Twitter as well.
Awesome. Yeah, were there any other closing thoughts you wanted to have in terms of any goals or any future things for people to anticipate coming from Fathom?
Yeah, I mean, with definitely, I mean, we hit a pretty big milestone today. We hit 5 million or over 5 million in TVL. So that's, pretty massive, I think for a protocol that really just launched, within the past few weeks. So we're, obviously pretty excited that with that, I mean, the next target would be 50 mil and, we'll double it each time we create a new target. But yeah, we're looking to operate at scale. So these are things, boxes we've got to check off. And then I think we did a pretty comprehensive job at covering the entire sort of industry landscape for RWA DeFi. So no, I think we're good. Pay attention to the Fathom Twitter. We'll be announcing some other stuff upcoming, but with the launch of vaults and the launch of lending in April, that'll pretty much be the full protocol. And then from there, we'll focus on onboarding, more asset management strategies. So we'll be putting stuff up daily, whether that's, an institution who wants to launch a strategy through a vault or a trade finance company that's looking for, this sort of crowdfunding via lending pools.
Yeah, I can't wait to see more. I can't wait to see more. I can't wait to see how regular people are able to interact with this and see how those platforms are able to become saturated with a good retail base, and see how regular people are able to utilize them, especially the vaults. I think the vaults are an interesting idea in themselves, and how people are able to interact with those. So yeah, I'm excited.
Yeah. Yeah, we're excited about vaults for sure. Everyone go and take a look, and any questions, reach out to us. We're happy to help. But yeah, this is great. Thanks for having me on, Quincy.
Yeah, anytime, Tyler. Anytime. Yeah, absolutely love being able to chat with you on everything you guys going on, everything you guys have going on. I actually, I talk to so many people, and we talk to people about what's going on in the network, and I always see you guys doing stuff. So it's always refreshing to be able to get a
Nice.
chat, and especially with everything going on and your platform. So yeah, it's got me really excited, and really appreciate your time being able to come on here and being able to talk with my chat about everything you guys have been doing.
Yeah, of course. Again, thanks for having us on, and everyone check out Fathom.